Hello, everyone. Good afternoon, and welcome to the IX Trading Room with me, Richard Perry, Market Analyst for INFINOX. Now, before we get into the trading room, a couple of small details, bit of a disclaimer, really. I'm going to be talking about live market information, so please understand that what I'm going to be talking about today is not meant to be construed as advice in any way at all. It's just for your information and for you to take forward as you wish. Now, what you can see here is our new platform, the IX1 platform. This is a platform that we've been working on for some time, and I'll be honest with you, I think it's pretty impressive. I've seen some trading platforms in my time. I think this is one of the best ones. So I think it's something that we should be certainly proud of at INFINOX, and it's something that I'm going to be now talking about when I look at market moves. So let's get into what I was going to discuss today. Now, as I said in the Instagram live post I just did, I'm going to be talking about three things. I'm going to be talking about the Bank of Canada and the impact that's going to have on the Canadian dollar and across forex markets, some other moves as well. I'm also going to be looking at gold in more detail and also the decline in US markets today. So straight into it with this Bank of Canada. Now you can see here I'm on S&P 400, so what I need to do is change that to my Bank of Canada. Now, first of all, as I said, this is the IX1 platform, very good platform. It's now taking over from the MT4, MT5 setup that we've got at INFINOX. So this is a big step forward and a very good functionality of the platform. But what we're going to be doing is talking about the charting element of it. So I'm going to put it to full screen. And we can see here the dollar Canadian move. Actually, before I do that, I was going to talk about what the Bank of Canada have done. Now, so the Bank of Canada have just come out with monetary policy. They have increased interest rates by 0.25% to 4.5%. However, they are now signaling that it could now be the end of its tightening. And that's interesting because basically they're now seeing that inflation's falling. They're seeing that growth indicators are turning over. They're also seeing the housing market starting to slow down. Now, the Bank of Japan, so the Bank of Canada sort of leads the Federal Reserve to an extent, certainly has done in its tightening. So this is interesting. Will it now start to also lead the Federal Reserve in its the end of its tightening is the question. Now, what impact is this having? So let's have a look at forex majors. You can see here, this is over the last month. This is performance against the dollar. So over the last month, the Canadian dollar is probably it is one of the worst performing currencies, along with the Swiss franc. Now, up here is the Australian dollar, the best performing currency. And why is that happening? Well, the Australian dollar yesterday and into today has seen that inflation is rising more than expected, and that is going to put pressure on the Reserve Bank of Australia to hike interest rates more than maybe the market had thought before. So what does this mean? It means the likelihood is a stronger Australian dollar. We can see this throughout the last month in 2023. As risk appetite has improved, the Australian dollar has certainly outperformed the Canadian dollar. So bring this back. What does this mean? Well, let's have a look at the platform. And we can see that US dollar Canadian has just ticked a slight amount higher, but that's not maybe the one that we should be looking at. Maybe if Australian dollar is outperforming and the Canadian dollar is underperforming, maybe we should be looking at Aussie CAD. And you can see here, look at the strong run higher that we've got in Australian dollar versus the Canadian dollar. Really bullish trend that we've got going on here. I'm going to draw in a trend line to show you that this is a properly strong move, and it's broken out again. And we can see this breakout that it's happened today. So Australian dollar versus the Canadian dollar, again, breaking out through resistance. You've got strength in the momentum. It looks like a very strong move. So I would be looking at this and thinking, well, I want to be on this. I want to be in this trade on the upside. I want to be buying into any weakness into the uptrend. And it's a strong move higher. Now we can go back to see the importance of this next resistance here. Look at this resistance. If I get the crosshair on that reaction high, that is 95.15. So it's not too far away from that. It's actually had a look at that today, 95.08. It's come back a little bit, but it certainly is an important resistance. You can see that if it breaks out through that, it really is up, up and away. You see the strength through the RSI. This is a chart that certainly looks like it's going to continue high. It's certainly in the direction of Australian dollar strengthening against the Canadian dollar. And momentum is strong in this one. So you'd be looking to buy into, well, I'd be looking to buy into weakness in any of these moves. Let's get on the intraday charts, see what they're looking at. Still strong on the intraday charts. You've got this nice breakout support, 94.45 area. Again, something that I think is interesting there, 94.45 initially, but essentially you've got again another strong band of near-term support, 93.80 coming in there. So any unwinding move that brings it back towards these sort of breakout levels, that looks to be chance to buy territory. So strong moves there on Australian dollar versus the CAD. Now, the second topic I wanted to talk about today was the gold price. Now, gold has been very strong. Gold has been very strong since early November, really. You can see this chart back to the 3rd of November was the big reaction low that gold then started to take off. And it's been strong ever since. Now, in the last week or so, it's been positive without being driving higher. That RSI is up around 70, which reflects a strength in the trend, but also potential for a little bit of a near-term pullback. And that's what I'm looking out for, potentially for a near-term pullback. So if I change the daily chart to, say, for example, a 4-hour chart, it's the first line there. Let's zoom out a little bit. You can see here, look at this blue line. This is the 55 period, get this right, 55 period 4-hour chart moving average. So bit of a mouthful that, but anyway, you can see that that is a good basis of support, and it has been ever since, well, basically throughout January, ever since the end of December. That 4-hour on the 4-hour chart, the 55 period moving average has been an excellent basis of support. It's come back towards that again today, found support, gone higher again. Look at this on the RSI. Again, throughout January, every time this 4-hour chart RSI gets back towards 45.50, it then starts to pick up again. So again, this is basis of support territory. It's come back to a good line of near-term support again and found support and held around the 1920 mark. So I would think that this is an opportunity. This still has, I think, legs to run in this bull trend. It's not a massively strong bull trend in terms of how the momentum is looking on the daily chart. Get that daily chart back again. You see that, as I said, that momentum a little bit stretched, you could argue. Maybe that is restricting to a certain extent how this one is moving. But you've got a strong trend there. So that strong trend higher comes in at 1895, basically around that key reaction low that we saw the other day. That was 1896 and 50. So yeah, you can see here that that is an opportunity. Any unwind back is an opportunity, I think, to go long on gold. We've still got the support of that moving average. This is on the daily chart, and that is the 21-day moving average there. It's got a little bit away from it, but still I think is certainly looking positive there. So I think that there is further room in this gold move higher. Yeah, you might see a little bit of a near-term pullback. The importance would be then to have stock positions underneath that 1895, 1896 key reaction low, below that and below that uptrend. But it certainly looks as though it's continuing higher with the strength of a momentum, and it could well be on the way towards the sort of like up towards the 2000 mark. It could be that, I mean, bearing in mind how strong this trend is, that is basically what this chart is telling us at the moment. Strength of momentum, strength of trend, breaking out through resistance, old resistance becomes new support, all these key factors behind the gold price moving higher. So for near-term positions, it certainly looks like an opportunity around that, as I said, on that 4-hour chart, that 55 period moving average around the 1918, 1919 area. That looks like an opportunity to buy. Let's have a look. I was going to talk about US markets very quickly. US markets have fallen back today. We had the Microsoft earnings last night, which have been a little bit of a concern for markets. It was the forward guidance that markets were not happy with. The earnings beat expectations, the revenue missed expectations, but it was the forward guidance that has really pulled Microsoft lower and subsequently tech stocks today. You can see here on the platform, where am I looking? Nasdaq 100 down 2.3%. So Nasdaq is very much sort of underperforming, and that's due to those Microsoft earnings data today. So a little bit of a pullback near term. Is this an opportunity? Let's zoom in a little bit. We can see that basically what we've got on US markets is that you've got this trading range. You're sort of back towards the 3,780 area, something around that, up towards the sort of 4,100 area. So you've got that as a trading range, and basically around the middle of that trading range, you've got a bit of a band, a trading band, which I think is supportive. It sort of dropped not far from that trading band, that pivot area. You can see here, old reaction high became reaction lows, and then was a little bit restrictive, but then has become supportive again. So you've got this trading band of a pivot area between sort of 3,000, let's say 3,900 area, up towards sort of 3,925 area. So a little bit of a pullback today. I don't see this as being at the moment on a near-term basis. I don't necessarily see this as being disastrous. I think it's just pulling back towards that pivot band. You can see also effectively, if you look at this RSI, it effectively sort of plays out this pivot, doesn't it? And the pivot is around the 50 mark on the RSI. So holding that line, if it holds above that 50 mark on the RSI, you hold that trend, that pivot area of support, and then it gets, the chances are you'll be sort of pulling back towards the highs again. Not necessarily calling a breakout quite yet on S&P 500. I don't think it's time to call a breakout yet, but I think that certainly it still has the potential to test the reaction highs of this trading band. But yeah, interesting moves on S&P 500 today. Right, so let's have a quick look forward to tomorrow and do that through my calendar here. Let's just move that a little bit bigger. You can see here tomorrow, not a great deal going on until the US session, and then you've got a whole batch of data. You've got the advanced GDP. This is the big one. Advanced GDP for the States is expected to come in at 2.6%. Now, interestingly, that's the consensus, but look at this GDP now. This is the GDP now forecast, which is produced by the Atlanta Fed. This is looking at, this looks at the data, they plug it into their little widgets, and basically it produces the nowcast, and they're thinking it could be as high as 3.6%. So that'll be interesting to see. I mean, volatility if you see that tomorrow, but yeah, certainly the market's looking for 2.6%. I don't know why that is there, because that is basically the market is looking for 2.6% on the consensus. But yeah, US GDP is the big one tomorrow at 1:30 UK time. And we're likely to see some volatility around US dollar positions. You'll see volatility in the S&P 500 again, and also commodities such as gold. So lots of markets will be linked to this US GDP data, and the interesting moves I'm sure will be coming out on the back of that. So volatility tomorrow can be expected. Whoa. Right, I've got through it all, which is good. Don't forget, if you're on YouTube, please go to our, well, if you're on the channel, subscribe to the channel. If you're on the channel and subscribed, please click on the bell to get notifications, I believe that's right, of our webinars and our postings. So that's all there. So good to see you coming through this today. I hope you've enjoyed the webinar. Nice and short and sharp, 15 minutes, talking about, as I said, Bank of Canada and the impact on forex markets. Looked at the whether it was the right time to buy gold, and also looking at the US markets as well, looking at a bit of a pullback. So yeah, come and don't forget, we're going to be doing this webinar every week now at 4 o'clock UK time. So hopefully this is encouraging a lot of people to come to view our webinar, and I look forward to seeing you again next time. But thank you very much for coming. And what I'll do now is leave you with our lovely info video about INFINOX. But yeah, good luck in your trading, everyone, and I will speak to you all soon.